Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the materials, specialty chemicals, micro-cap stocks. Okay, so if you haven't noticed, the specialty chemical penny stocks have been running, and so there have been some big breakouts in the sector, and so our RKDA has been the one that's been the super hot runner this last few days. As you can see here, it closed up 311% today. That was a huge move, so congrats everybody. You know, we did alert this at much lower levels. As you can see, take a look at RSI. It's pushing at 95 right now, so that's extremely overbought. You also have Fasto at 86, so that's another overbought level. So yeah, keep that in mind. It's super frothy right now. It broke out last week. You know, you can see this the big load here. There was the front load. You see the big volume bar down here. So traders loaded in the end of February, and then it took off, and then it got above that 300-day simple moving average. That was a huge move. Well, today there was a gap up open, so now there's a gap between high of day yesterday and low of day today, and so if there is a pullback, this gap could fill. A drop down to 15 would fill the gap. So yeah, so keep in mind today's candle did close well above the upper Bollinger Band, so you do have the upper Bollinger Band down here at 27, and you have EMA 4 at 25.50. So the downside risk is that the candles work their way back into the bands and test that EMA 4 support level, and then if EMA 4 broke, the big risk would be that it would drop down to fill that gap. I mean, look at the average daily volume over here. So this is a stock that is very thinly traded, and so yeah, so thinly traded stocks, you know, when they have big volume spikes, you know, and the volume dries up, many times they do pull back. And so if you look here at the weekly chart for RKDA, you can see it's been on a multi-year downtrend, and then finally there was this big reversal, huge volume. It did have that recent reverse split, so that created a very low float. As you can see now with the big volume, the float has increased greatly. Okay, so you're looking at 18 million shares traded. Yeah, and so yeah, if you look up here, it's currently hitting this key resistance zone from back in 2016. So we were calling it the 40 to 50 resistance zone. I know that's a big area, but that the bottom of support was around 40, and the top here was back in June of 2016. And so if it can get above this 52 level and close above, then it could cruise up into the 60s and 70s. You do have you know, the next high close up here at about 65, and so that would be a target if it gets above 50. If it pulls back and you see it drop below 40, that would be a red flag. As you can see on the weekly chart, it's busting through the upper Bollinger Band as well. That's down here at 26.24, and so that is a big level to you know, that many times when you get a push above the upper Bollinger Band like this, the candles do work back into the bands, and so you could see a potential drop down to EMA 4 and down to this 100-week simple moving average at 20.58 if it fails to stay above 40. So keep an eye on that. It needs to break through that 50 resistance zone and stay above 40. Above 50 signals more upside potential. A drop below 40 is going to signal downside risk. Okay, if we look at the RKDA 15-minute chart, you can see here it got above the high close horizontal resistance level today. That was on this candle right here, and that was a really big move at 245. That, you know, anytime that you can close above high close horizontal resistance, many times it signals a breakout higher. It ran to high of day, and that is where it found some resistance and it pulled back. Now you want to see it stay above this high close level. That looks like it's lined up with around 46 or about 47, and so if it drops below that, that would be a signal it's cooling down. Now it needs to stay above the middle Bollinger Band at 42.40 on the 15-minute chart. You know, that's you know, the bull bear line, and so above that level, RKDA is bullish. But if it drops below, that would be a red flag, and it could drop down to test that low of day support here, that intraday support at 130 at 34. And if 34 broke, you know, there's that 20 20 level again, you have the 50 simple moving average way down here at 26. A break below the middle Bollinger Band many times leads to a 50 simple moving average test on the 15-minute chart. Check out all the volume here. So there was really big volume. Look at the load. You had the load before the rally. So yeah, this has been a big move. Congrats everybody. And so when the entire sector is running, the key is to try to find other stocks in the sector that could possibly heat up. And so YTEN was on our radar, and we had put out alerts this last week that to keep an eye on it. It was heating up. It had closed above this green line, which was the 50-day simple moving average, and it was able to turn that level into support. And then finally today was the big payoff. As you could see, it closed up 73%. So congrats everybody. I know there were a lot of people in the chat that were on this one. Check out the RSI. So it is hitting a previous level where it's topped out at in the past. So yeah, keep that in mind. It's very frothy on RSI. And now you have Fasto at 91. This hasn't been above 80 on Fasto in a very long time. And when you see a stock that fails to get above what we call the power zone on both indicator, that signals that this could be temporarily overbought. It is signaling temporarily overbought. It pushed really hard. And so now, okay, today there was we were looking for intraday was a break above the 100-day simple moving average at 220, and it was struggling with that most of the day to get above that level. And then towards the end of the day, it just pushed through and really got cruising, and it ended up closing all the way up here above the 200-day simple moving average at 286. That's the red line. It needs to hold that level. If it can stay above that level, then the next level to break is the 300-day simple moving average at 327. Above 327 would be bullish. It could run up here into the fours. You have the some previous closes up here at 425, and then the high closes all the way up here at 550 from back here in December. So that's where it could retrace to up to 550 if it can get above this 300-day simple moving average. If it drops below the 200-day simple moving average and that 286 support level, that's going to be a red flag. Once again, you have a candle that closed well above the upper Bollinger Band, similar to this candle back here. You could see how this candle closed above the purple line is the upper Bollinger Band, and notice how the candles work their way right back in. That's exactly what could happen here. Notice that back when YTEN formed a very similar volume bar, the big volume spike, you have a close above the upper Bollinger Band, and then once again, you have the close above the upper Bollinger Band over here. And so, if history repeats, the candles will work back into the bands. It's all going to be a matter of whether or not it can hold support. RKDA took off and kept running, and maybe YTEN will as well. You'll know by whether or not it stays above that 286 level. If it drops down and works into the bands, you want to see that 100-day simple moving average at 220 hold. Okay, if you look at the 15-minute chart for YTEN, you can see how it had that nice push early in the day, and then when it pulled back, notice how it held this dotted purple line. That's the middle Bollinger Band. That's exactly what you wanted to see. This was the load zone after the pullback. So you load here for the push higher, and that did, there was a payoff. The big volume came in at 2 o'clock, and it took it higher. Once again, what you always want to do is draw on your trend line, your horizontal resistance. This was the high close. Okay, so that was the peak, and then it pulled back down to here. And so what you want to see is a break above that high close level, and that did happen on this candle at 3 o'clock. And then notice the payoff was it pushed higher. And so yeah, so you're always looking intraday for those breaks above resistance to signal that the stock wants to keep pushing. If it stalled out here, that would signal a temporary top and that it would pull back. And so that was a very nice move on big volume. So it's set up to push higher. It just have to see whether or not it can stay above that key 200-day simple moving average on the daily chart. You keep an eye on EMA4 at 275. If it closes below, that'd be a signal it's cooling down. And then you want to see it stay above this high close at 1115. If it drops below 250, that would be a big red flag. Okay, take a look at DELT. Okay, all the stocks in this video are the same sector. They're all materials, specialty chemicals, microcap penny stocks, okay? And so some have low volume like DELT, but sometimes the volume pops up, okay? So you know, this is percolating. It seems like it's heating up here. It has RSI at 55, and so notice this very tight channel. And so yeah, if you look back here first in January, you can see, you know, volume does show up sometimes. It had 35 million shares, and this thing, you know, pulled an RKDA, and it went from you know, from $1 down here, and it ran all the way up to 470 in a short period of time. Very similar type of move here. You know, this was a 1000% gainer here on this run, and so, you know, and as you can see here with DELT, it's had a similar run like that in the past. That's why we play you know, the penny stocks in the sector. Every once in a while they break out. The key is you try to time it when it's in action. Obviously, if you look here, you know, when it's not happening, you do not want to be holding, because you could just get stuck holding the bag. When the volume disappears, you want to be gone as well. So notice over here on the right that you have the very tight Bollinger Bands. This solid purple line is the lower Bollinger Band. This solid purple line is the upper Bollinger Band, and they're just super tight. And this is a very long sideways channel, you know, multi-week sideways channel. And today there was a close just above it. This closing price here on the 14th of February was the top of the channel, and that close above that level today, and the 100-day simple moving average at 124 does signal more upside potential. Now the moving averages are stacked up above. Okay, so there's the 200, the 50, and the 300-day simple moving averages all lined up above. Now if they can get above that 300-day simple moving average at 143, that's going to be your signal. Okay, it looks like it wants to head higher. That's what happened on this candle right here. Notice when it got above this 200 simple moving average, that's when it really took off. And so I'm not saying that that's going to happen on this for the stock, but it could. You never know. It's set up. It's when you see Bollinger Bands this tight, it's like shaking up a champagne bottle, and it's going to explode, and it could break down to the downside, or it could pop to the upside. And so a break above that 300-day simple moving average, it could explode higher, you know, hit this 170 level, you know, this high close, you know, you've got some high closes. It basically could run up to back up to that 230 zone from the closing price on January 8th. You know, if it drops below the bottom of the channel, the lower Bollinger Band and 109, that's going to be a signal that it's broken. Okay, downside risk. Another one to keep an eye on is BIOA. This is now trades over the counter, but it's another material, specialty chemical, and yeah, you know, it had a big drop down, multiple gaps. There's a gap here between these two candles, and then there's another gap between these two candles, low of day on this candle and high of day on this candle. And so today, this has a similar type of setup where it had a sideways channel, not as tight as DELT, but it has the sideways channel where it had, and it also had the close above resistance. The closing price here on the 7th was the key level to close above. It did close above that, and it closed above the dotted purple line for the first time since way back here on the 30th of January, okay, before the downtrend. And so, you know, on the 31st of January, that was the start of this very long downtrend. And so today was the very first close above the dotted purple line since the chart broke down. So that's a bullish change in trend. And so now if it can stay above 5, it's in play. Now it has to get above EMA 13, that's just above. It's pretty rare to see EMA 13 above the EMA or above the middle Bollinger Band. The middle Bollinger Band is the 20-day simple moving average, and so yeah, this does happen on a very oversold condition, and so this has been extremely oversold. This went from 48 all the way down to 4. So yeah, you're looking at, you know, 90% just wiped out or more. So basically, this has been just completely demolished. If it can stay above 5 and then get above 6, it could possibly run up here and fill the gap. That's the upside potential, is to you know, run up to that 9-10 level and fill the gap, which could be 100% gain if it can stay above 5. If it fails to get above 5, drops back below this into this channel, it will be a risk to hold. It has to stay above EMA's 4 and 8. That's the pink and lime line now that it is trading above. Okay, and then notice, you know, you have volume picking up. Yeah, you know, you have the big volume at the bottom, and so those are things that you want to see when a stock is trying to get a reversal going. Take a look at AMRS AMRS. Okay, so this is the this is like the top dog in the materials specialty chemicals. It's already has been running well. It's already up to $6 range, and so these other ones we've been talking about besides RKDA, they don't have the volume that AMRS has. This is kind of the top of the micro cap specialty chemical stocks, and so the interesting setup here is it's hitting this zone where the closing price on the 23rd of February, and so if it can get above 590 and close above that level, that's going to signal that it wants to break out higher. It's been in a very strong uptrend. It's still holding EMA4. It pulled back for a couple days. This sector has been super hot. Maybe it'll break through above 590 signals it wants to head higher. Now if it drops below the middle Bollinger Band currently at 550, that will signal downside risk. Right now it's holding EMA4 at 572. A drop below EMA4 would be a signal that it's cooling down. But yeah, keep an eye on it. It could, it might break above that 590. You never know what the other stocks in the sector are running. Another one to keep an eye on is AMTX, another specialty chemicals. It's pulled back. It made a nice move last week, and so it was one of the stocks that was in play. It broke above the moving averages. We did put out alerts on this last week, and yeah, it took off, and then when it formed the black candle, that was your signal to head to the exits. Above the 50-day simple moving average. Okay, so how it works is above the middle Bollinger Band signaled, okay, it's heating up, and then when it got above the 50-day simple moving average, that was like, okay, it's in play. It had to break that 100. It got above that the next day. It hit the 200 and the 300-day simple moving averages. It was still in play as long as it could get above. It got above that level on the 7th, but it formed this black candle. And when a black candle forms after a multi-day run and during an uptrend, especially when it forms above the upper Bollinger Band, our strategy is to head to the sidelines. That worked out well here. It pulled back, and so now it's right at that 300-day simple moving average at 105. If that level holds, it could bounce here. Now the downside risk is if 105 breaks, it could drop down to that 200-day simple moving average, the red line here, which is also lined up with EMA 13. All right, so that's a big level. Yeah, if you look here at 115, that's going to be the big resistance level to break. If it can close above 115, then that would be a signal that it wants to head higher. So it's right now it's in between the two key levels. Below 105 signals more consolidation and downside risk, and then above 115 signals that it wants to head higher. If it can get above 122, it could possibly run back up to that 140 resistance zone. Okay, keep an eye on GEVO, very thinly traded as well. It's been turning the middle Bollinger Band into support. As you can see here, it does get volume at times. It's had some nice days. I mean, it's traded, a couple $1 million on the day. And so, for a penny stock, that's some good money flow. And so it has tight Bollinger Bands right now. It's turning this middle Bollinger Band into support currently at 466, basically 47. If it can stay above 47, it's in play. And then it has to bust above that upper Bollinger Band at 484. If it can do that, the 50-day simple moving average at 525 is the key level to break. If it can get, that's the big one. If it busts above that, then it could follow the way YTEN and some of the other stocks have done and run up to that 100 and 200-day simple moving averages. So keep an eye on a break above that 49 level as a signal. Okay, yeah, it looks like it wants to run, and then yeah, if it can get above that 53 level, then it could possibly run up to 58 to 60. Okay, it has really light volume here. Okay, so it looks, and it's holding support. All it needs is a bullish volume spike and a push through resistance. So keep an eye on it. And then just two more. These are in the sector, so I'm going to show it to you. Yeah, I'm surprised here. This trades options, which is crazy. I'm sure it has no volume, but yeah, this actually, okay, I take that back. This does have some good volume here. Okay, so it's the next one. I'm sorry. sorry, that was TORM. That's the one with the no volume. I'll get to that one next. But GURE, it says here it does trade options. It is light volume right now at 52,000 shares. It's hitting the key support level right now, and so the 100-day simple moving average, the 50-day simple moving average, and the middle Bollinger Band have all converged in basically the 150 support zone. It's 152. If it can stay above 152, then this is where it could get a technical bounce. If it can break above that 164, that would be really bullish. It has a lot of work to do. It's not. It has more of a sideways type of channel going. Yeah, if you put in the support and resistance here, you can see it's just been working kind of sideways. And so when you get the sideways channel like this, if you're trying to trade, if you're not trying to trade on the breakout above the top of the channel, you're trying to load off the bottom, sell off the top, load the bottom, sell the top, load the bottom, and so this was just sell the top, and so right now it's in the middle of the channel, and so it's kind of in no man's land. Yeah. So, but keep an eye on it. If it holds that 150 support zone, it could get a bounce. And then, yeah, take a look at this one. I shouldn't even show this to you, but it was, it's the last one that I have for the microcaps in the sector. I could be missing something, but these are some of the stocks that I have that are specialty chemicals. And yeah, TORM, only 648 shares. It's not worth trading, but as you can see here, it did get loaded on the 12th, and then it is above the middle Bollinger Band. Yeah, so they have been able to walk it higher with no selling pressure. Yeah, and you have the, so what they'll be looking for is a run up to that 50 and 100-day simple moving averages. Okay, thank you very much for viewing this video, and yeah, congrats to everybody that traded RKDA. I mean, it is incredible when you can get a 1,000% gainer on a penny stock, especially something that runs from $5 to 55 in a short period of time like that. So very, very cool. Congrats everybody, and yeah, just keep following the charts and come check us out in our chat. I will post the link below the YouTube video. Okay, thank you.